Your performance happens to coincide with the macroeconomic outlook that has India's GDP since 2015 at least, overtaking China, being number one among the group of 20 countries and likely to continue so over the next several years. But there's one risk on the horizon that everybody's aware of, and that's non-performing debt. Your bank is not in that category by design, but it is a risk. Maybe you can tell us what kind of a risk it is, and is it a hurdle, an obstacle?
We have an NPA in the system of about 9.2%. Provisioning against this is about 5.1, 5.2, so around 45% is provision, plus they have security. Capital adequacy is 13%, and 70% of the system is owned by the government. The government has put in now very good measures which will lead to an NPA resolution. This NPA issue this government inherited over a period of time. So they brought in the Insolvency Act. They have asked the regulator to be more active. They have forced the banks with tighter standards, and at least the big borrowers that had created a problem, they've singled them out, and the banks are required to sort them out in the next 6 months, or they refer them to the bankruptcy court. So I do believe that over the next 12 to 18 months, this problem should not be that much of an issue. The government is also talking about consolidation, which will improve the capital adequacy. It's talking about disposal of non-core assets and bringing services, common services for the banks together. And whatever is the balance, they will put in equity. To superimpose on this after the demonetization, because a lot of money that was under the mattresses came into the system, the money market today is surplus by about $50 billion. So is there a shortage of money today? I would be happy to give any viable proposal a loan, any amount he wants. So I don't think that'd be a constraint. And private investment, which will require a lot of money as capital investment, has been a bit slow because a lot of capacity had been created. We think that will happen over the next 12 to 18 months, and by which time the banking system should also be ready.
So the financial industry here has had a dramatic increase in weighting over the past 5 years, something like 11 percentage points. Is that likely to continue?
I think it's likely to continue. It might increase a bit because this weighting in the market is based on a tremendous undervaluation of the public sector banks. If they get that situation right, the valuation there should be a multiple of what it is today. So I'd say it will grow.
What about growth?
Now growth, if you take, we are again fortunately positioned. So if you take where we stand today, we probably have the best brand in the system. We don't, as you rightly said, we like the old-fashioned banking. I give you money, you give me my money back, or you have a problem. So we don't have any asset issue. We're in a country that's growing at 7.5% plus, could be going to 8% once the capital comes in. We've also, during this time, with the use of technology, taken our products to semi-urban and rural India, where 60% of India lives. And previously, it did not make sense on the cost to revenue basis. But now with the ability to deal with them on the mobile, with the ability to be able to take photocopies and send the messages, with the ability to provide them backup, with the ability to be able to train our people electronically, we've gone in there, and that today accounts for 20% of the business, and we are almost the market leader. We are almost the only major financial institution on the asset side of the business. So we should grow there. So the country will grow. We will grow as a combination of increased market share and increased geographies. And so I don't think growth is an issue into the future.